Nvidia just reported a quarter that has left Wall Street analysts completely stunned. This isn't just an earnings beat, it's a report that fundamentally reshapes what anyone thought was possible for a single company in just 90 days. The numbers that just dropped are so staggering, so far beyond any rational prediction, that they almost look like a typo. They're not. The street was bracing for a big report, but nobody was ready for this. The figures feel like they were pulled from the future, leaving investors and competitors in a state of shock. We're talking about a company that's now making more money from one single division, its AI data centers, than most global corporations make in a year. The results are, for lack of a better word, impossible. And today, we're going to break down exactly how this happened. The numbers are in and they are jaw dropping. For their third quarter of fiscal year 2026, Nvidia didn't just meet expectations, they shattered them, posting a record breaking revenue of $57 billion. That's not just growth, it's hypergrowth. And the engine behind this unbelievable surge, a colossal $51.2 billion generated from their AI data center business alone. These are numbers that analysts privately admitted they didn't see coming for another 2 or 3 years. So, how did one company manage to capture the explosive force of the AI revolution and turn it into one of the most incredible earnings reports the market has ever seen? And more importantly, what does it mean for the future of tech, the economy, and your portfolio? We're about to explain everything. Quick pause. If you're enjoying this breakdown and you want the deeper research I don't post publicly, make sure you join my free newsletter. That's where I send my private market notes, charts, and early warnings before I ever film a video. And if you want to go even further, I'm building a brand new class that teaches the exact macro and market frameworks I use to analyze moves like this. Newsletter members will get first access and the early bird pricing, so jump in using the link in the description. Let's get right to it. The headline number that has everyone reeling is the total quarterly revenue of $57 billion. To put that into perspective, analysts on Wall Street, the people paid to make the most accurate predictions possible, were forecasting a number closer to $55 billion. Beating estimates by $2 billion at this scale is almost unheard of. It represents a 62% explosion in revenue from the same period last year, a speed that a company of Nvidia's size simply shouldn't be able to achieve. It's like watching a battleship accelerate like a speedboat. The profit numbers are just as mind bending. The company delivered an earnings per share of $1.30, sailing past the consensus estimate of around $1.26. This isn't a rounding error, it's a clear signal that Nvidia's profitability is scaling even faster than its revenue. This is made possible by their incredible non-GAAP gross margins, which are projected to hit 75.0% in the next quarter. In simple terms, for every dollar of product Nvidia sells, they're on track to keep 75 cents before operating expenses. That level of profitability is the envy of the entire technology world. Closer to a dominant software company than a hardware maker, it's proof of the premium customers will pay for their tech and the powerful moat they've built. But to really get the story of this quarter, you have to look at the division that has become the heart of the entire operation, the data center business. This is the part of Nvidia that builds the powerful GPUs, the engines of AI. This quarter, that division alone brought in a record $51.2 billion in revenue. Let that sink in. That is not an annual figure. It's for a single 90-day period. This one division's sales dwarfed the total revenue of countless iconic companies. It's more than many nations have in their entire federal budget. This wasn't just a big quarter for AI. This was the quarter AI officially took over the financial world, with Nvidia holding the reins. The demand is so relentless, so all consuming that Nvidia is essentially building the future as fast as it can, and the world is lining up to buy it. And while the data center story is the main event, Nvidia's other businesses are performing incredibly well too. The gaming division, once the company's crown jewel, posted a very strong $4.3 billion in revenue. This shows that even as AI takes the spotlight, Nvidia's core market of gamers remains incredibly loyal and robust. The demand for high-end graphics cards is still a powerful and consistent moneymaker. On top of that, their professional visualization and automotive segments are adding hundreds of millions more, with automotive revenue hitting $592 million for the quarter. This proves Nvidia's technology is becoming essential across every major industry, from Hollywood effects to the software in your next car. This isn't a one-trick pony. It's a multifaceted tech behemoth where every part is succeeding. So, how did we get here? How did one company become so critical to the biggest tech shift since the internet? The answer is in understanding what an AI data center really is. Forget the old image of digital filing cabinets. Today's AI data centers are AI factories. They are sprawling, power hungry complexes packed with tens of thousands of specialized processors, all working together to train and run models like ChatGPT and the algorithms that recommend everything you watch and buy. And at the heart of nearly every one of these AI factories is an Nvidia GPU. Nvidia's dominance comes from a brilliant decade long bet. Over 10 years ago, the company realized its GPUs, made for video game graphics, were also perfect for the parallel processing needed for AI. They invested billions into a software platform called CUDA, making it easy for developers and scientists to program their GPUs for AI tasks. This was a masterstroke. While rivals sold chips, Nvidia built an entire ecosystem. They gave the tools to the builders, and the builders, in turn, locked themselves into Nvidia's platform. Today, trying to build a large-scale AI application without CUDA is like trying to build a modern skyscraper with hand tools. It's possible, but it's painfully slow and inefficient. This software mode is arguably even more important than their hardware. This created a virtuous cycle. More developers on CUDA meant more demand for Nvidia's GPUs. This cash infusion allowed Nvidia to pour even more into R&D, creating progressively more powerful chips like the recent Blackwell generation. Each new chip widened the performance gap with any potential competitor. Tech giants like Microsoft, Amazon, Google, and Meta found themselves in an arms race. To compete in AI, they needed the best tools, and the best tools were, without question, made by Nvidia. This has led to a demand that can only be described as insatiable. We're hearing about deals that are almost too large to be real. For instance, reports have surfaced about OpenAI's planned Stargate AI supercomputer, a project that would require millions of next-gen GPUs. Microsoft has reportedly committed staggering sums to its Azure cloud infrastructure, with a huge portion going to Nvidia's chips. These aren't just orders, they are multi-year commitments to building an AI-powered future on Nvidia's platform. Nvidia isn't just selling shovels in an AI gold rush. They own the only mine that produces gold, and they're selling it at a massive premium. The company has such a clear view of its future demand that some suggest it already has visibility into orders that could top $500 billion through 2026. This is what gives the company and investors confidence that this impossible run is far from over. Nvidia's earnings are so much more than one company's success. They are a bellwether for the entire global economy. They are the most tangible proof that the AI revolution isn't just hype. It's a multi-trillion-dollar industrial transformation that is happening right now, faster than anyone predicted. The $51.2 billion that Nvidia just booked for its data centers is money being spent by other companies. It's a direct reflection of the immense investment businesses are pouring into AI. This has a profound ripple effect. It validates the strategies of companies like Microsoft and Google spending billions on AI. It signals a coming boom for the industries that support these AI factories: electricity providers, real estate firms, and networking companies. Nvidia's success is a leading indicator of a massive economic expansion centered around AI. This report has effectively silenced many critics whispering about an AI bubble. While stock valuations can always be debated, the underlying demand is undeniably real. A bubble is speculation chasing little fundamental value. Here, we see astronomical value being created, with Nvidia at the epicenter. Of course, with such a meteoric rise, the big question is, can it last? The bull case is compelling. Global AI infrastructure spending is projected to climb into the trillions. Even if Nvidia only captures a fraction of that, its revenues are set to continue climbing. The company isn't standing still. It's on a relentless one-year product cycle, with the next generation Rubin platform already announced to follow the current Blackwell chips. This rapid innovation keeps competitors constantly on the back foot. However, it would be irresponsible not to consider the risks. Nvidia's success has made it a giant target. Every major chip designer, including AMD, Intel, and even some of Nvidia's own customers, are working furiously on alternative AI chips. A viable competitor could eventually eat into Nvidia's market share and margins. The second major risk is geopolitical. Increased US export restrictions on advanced technology to certain countries, like China, could potentially impact a slice of Nvidia's revenue, a risk the company has acknowledged. Finally, there's economic sensitivity. If a global recession hits, would companies pull back on their ambitious AI spending? While many argue AI investment is now essential, a severe downturn could slow the pace of the build-out. Despite these risks, the market's reaction has been overwhelmingly positive. Analysts from firms like Bernstein rush to reaffirm their buy ratings, with some setting price targets that imply significant upside. The consensus is that while the path may have bumps, Nvidia is uniquely positioned as the primary beneficiary of the single largest wealth creation event of our lifetime. The debate is no longer about if AI will be transformative, but how much value will go to the company building its foundations. Before we wrap up, if you want to go deeper into everything we talk about on this channel, the macro cycles, the liquidity flows, the market signals behind moves like Nvidia's, I send a private newsletter every week where I break all of this down in a way I can't do on YouTube. It's completely free, and it's where I post my research, my charts, and the big shifts I'm watching before they play out. You can join using the link in the description. I'm also developing a full class that teaches the exact system I use to understand tech cycles, macro behavior, and market dynamics. Newsletter subscribers will be the first to know when it launches, and they'll get early access pricing. So if you want the deeper analysis, when you want to be first in line for the class, make sure you sign up for the newsletter. So, what's the real takeaway from Nvidia's impossible earnings? It's that we are witnessing the dawn of a new industrial age. Just as oil powered the last century and microchips powered the digital age, Nvidia's GPUs are powering the intelligence age. This earnings report is a landmark event because it quantifies the sheer scale and speed of this transition. This isn't just about one company's spectacular quarter, it's a paradigm shift made real on a financial statement. The staggering $57 billion in revenue and the $51.2 billion from AI data centers aren't the end of a trend. They are the start of one. They signal that the race to build artificial intelligence is accelerating, and the capital being deployed is on a scale we've never seen before. Nvidia, through foresight, strategy, and relentless execution, has positioned itself as the toll booth operator on the superhighway to this new future. While questions about valuation and competition are valid, one thing is now undeniable. Nvidia is no longer just a chip company. It is the foundational pillar upon which the future of technology is being built. Its financial performance is a direct proxy for the progress of AI itself. These earnings didn't feel impossible because they were a mistake. They felt impossible because the future just showed up, years before anyone was ready for it. Now, I want to hear from you. What do you think of these incredible numbers? Is this a sign of a booming industry, or are we seeing the peak of an unprecedented cycle? Let me know your thoughts in the comments below. And remember to join my free newsletter for deeper analysis, and newsletter members will be first to know when my new market strategy class goes live.